Hello and welcome to the Adansonia Global Opportunities Portfolio Update for March 2024. This is our disclaimer. Please read it at your convenience to move forward. I will take it as read. So the performance of the portfolio continues to be strong. For the month of February, we eked out a small gain versus the index, outperforming it by 20 bips. For the 12 months, we've delivered a rolling 38% return, outperforming the market by just under 18%. And since inception, we've delivered 17.3% per annum compounding, outperforming the index by 6.2% per annum. The portfolio has not changed much over the month. We sold our Volkswagen holding and switched it dollar for dollar into Porsche. And I'll be talking about Porsche on the next slide. And that's roughly a 4% holding in your portfolio. At the end of the month, the portfolio was running still with around 12.6% cash and 14 holdings. So we've got a lot of dry powder to take advantage of any further opportunities that may arise. So as I mentioned, the stock of the day is Porsche. Instead of having a list of points, I thought that I'd just put up a chart. A chart tells 1,000 stories. A chart is worth 1,000 words. And this is a chart of the relative performance of Porsche from the IPO date, which was the 29th of September 2002, versus Ferrari. Ferrari, the green line on the top, Porsche, the blue line on the bottom. As you can see, there's been quite a marked performance differential between the two shares, and this is why essentially Porsche is attractive on both a relative and absolute sense. If you remember when I spoke about why we bought Volkswagen, Volkswagen has a stable of brands such as Lamborghini and Bugatti, and it had Porsche, which weren't being fully recognized in the share price when you have a look at the value that's been put onto Ferrari after it was basically spun out of Fiat, Chrysler Fiat, a few years back. So the hypothesis was that there was a lot of latent value there, which wasn't being seen. So obviously, with the IPO of Porsche, which was the largest IPO in Germany and I think in Europe for 25 years, in September 2002, we thought that the market was then in a better position to fully assign the value to another luxury car brand such as Porsche if it was an investable entity in its own right. As you see, the stock basically performed in line with Ferrari till around June 2002 and then essentially collapsed. While the company has been delivering relatively solid earnings results, it did warn of macro headwinds, particularly from China, and those headwinds are also basically, again, reiterated more recently, is saying that the company has been delivering to expectations and recently did increase its dividend. We opened the position in the portfolio for our clients around the 80 euro mark, which is around the price of the IPO back in September 29th of September 2002. It's currently trading around 93 euros. We value the stock just over 100 euro a share. Just also to give you a feeling of the relative value between Porsche and Ferrari. Again, two very, very strong brands. Porsche is currently trading at around 15 times prospective earnings. Ferrari just over 46 times, and Porsche also now is delivering a 3% yield versus Ferrari, which is less than 1%. So we're very happy with the outlook. Also, Porsche, in terms of catalysts that are going to be driving the share price, Porsche is delivering quite an exciting new range of cars in 2024. The first one is the Macan 4. It's been completely redesigned. It's electric. I believe the design is a lot more attractive than what is currently there now. Also with the Macan 4, because it's electric, it's a lot roomier inside, and the performance of the Macan in terms of battery life and distance traveled or range looks to be a lot more a lot superior to what we're seeing now with the Taycan. There are two ranges, or there are two variants of the Macan 4 and also the Macan Turbo, which again is the sporty version, which is a 0 to 100 time in under 3 seconds, which is really quite amazing. Secondly is the 911, the Porsche 911, the most iconic car, is coming out in hybrid form. So essentially, very much a pure sports car. The outlook for the hybrid looks very good in the sense that they're putting in a lightweight battery and putting electric drive on the two front wheels while keeping the petrol drive in the back. It gives the car better balance and obviously four-wheel drive, better grip, better acceleration, and obviously while the car is a little bit heavier, the power is more than there to compensate for it. The reviews of this car, or the reviews of the hybrid 911 are quite good, and the company has essentially done a lot of work before essentially launching this to the market, and very much a lot of their learnings from motorsport has gone into the new hybrid 911. So again, globally, we believe that these cars will be very well accepted. Australia, obviously, with the taxes that we put on everything, it's going to be a little bit of a harder sell. But I think the company, especially with a iconic sports brand that it has, is placed to do very well moving forward. And the metrics of the stock are in both an absolute and relative sense very cheap to peers. So again, very happy with that. Other than that, the portfolio remains unchanged from the last time we spoke. Anyway, that is the conclusion of the update for March, talking about the February performance numbers. From what we can see, for the actual month of March, we're tracking quite well as well. So I'm expecting we shall have some good performance numbers to report also for this month, for March, in the next few weeks. Again, as always, the contact numbers for myself and Tony are on the bottom right of this slide. Feel free to reach out anytime if you have any questions or if we can help with anything regarding our portfolio. Anyway, thank you very much, and I'll be in touch again in a few weeks' time.